Hey everyone, welcome to a pre-market daily editorial here on the KE Report. We are chatting with Joel Elconin, who is the host of the pre-market prep show. Click the link in the show notes to join Joel and his team for their pre-market prep conversation, as well as another link I'll post below, the Stock Trader Network. Joel, this week dominated by what the Fed was going to do. And on Wednesday, we got the rate cut. We also got the dot plot that is predicting two more rate cuts this year, a little bit more than expected, but then I believe only one more next year. So it seems like the Fed, at least right now, and we all know it can change, pushing rate cuts a little bit more forward rather than backward. The opposite of what we have been seeing from the Fed. Markets seem like they just continue to melt higher. Doesn't matter what news is thrown at them. Markets are, again, grinding higher right to all-time highs. Joel, what was your takeaway from the Fed rate cut, the predictions of more rate cuts, and the markets? Really doesn't matter, just moving higher.
Hi, thanks for having me. Always a pleasure being on the Correlate Economic Report. Powell delivered. They wanted the cut. They got the cut. He talked about another cut. If you look at the Fed Watch tool, very high probability of another cut in October. I think maybe the investing public perhaps was looking for a move in December as well as it continuing into 2026. And that wasn't as much as of a slam dunk. And I think that that caused a little bit of selling during his speech. But once again, the buy the dippers came back and took the market to a new all-time high today. Your laggard IWM that would deal with smaller companies need lower rates. They got what they wanted. And I have a good stat for you, gentlemen, and your listening audience. The Fed has cut rates when the market has been within 1% of all-time highs 16 times. All 16 times, the market has been higher in a year by at least 15%.
Well, Joel, based on that and based on the prior 16 times, what kind of upside targets do you have then for these markets that are at already rarefied air? If they're going to go up another year, what does that mean?
I don't even put, I do a level sheet. I'm very old fashioned. I don't even put resistance on it. All I do is put support. Now, being a little facetious here. The way that I was taught to do levels and numbers, I mean, you could always do, Fibonacci extension retracements, which, a lot of people do and look for targets that way. But I use some pretty simple stuff. I don't know if any of your people are familiar with the well-known floor trader pivot formula, but that gives you numbers based on the previous day's week and month range. So that's what I use, and that's really the only thing I have. And I'll have a number for tomorrow for you: 67,1975, right? All-time high. If a number's there once, it doesn't give as much significance as if it hits there twice or three times, then it adds significant. Right now, the other thing that I would focus on in stocks and some of these indexes is the highest low that the index ever made. And right now, I think we had some lower lows. Well, I mean, the highest low we've ever made, if all things stand today, will be today at 66.64. But if you want to play it, a little bit more conservative, you can look at the low from yesterday and use that as a point. And we're still 80 handles away from that low.
Joel, just taking a big look at these markets, I'm honestly a little bit confused because I keep hearing from some commentators that it's just big tech, it's just a handful of stocks that are continuing to hold these markets up and move them higher. But then I hear from some of our other commentators that seem to be a bit more generalist in nature that it's actually a wider range of stocks and sectors that are doing well. Yes, some aren't maybe at all-time highs, but there are a lot of positive trends in a lot of different sectors, not just the top 5 or top 10 tech stocks out there. Which side do you stand on?
I mean, it's definitely the rally has, it has its concentration. I mean, when you have 10 stocks, and I count Google as one stock, making up over 30% of the index, it's those stocks that, obviously carry the index. But I think if you look, under the hood, of course, gold and silver market, those stocks have had wonderful appreciation, much to the pleasure of your listening audience. No one is predicated more on interest rates, interest rate relief is small caps, IWM making a new all-time high today. Biotech companies, they need lower rates. It's much better for them. So those and then you just have your crazy, stocks like your quantum stocks just going ballistic today. Mineral stocks are going. So yeah, I mean, there's not even a broad pause in the action. Have you looked at the Google chart lately? I mean, so this market, there's the haves and then there's the have-nots, and it's spread it out a little bit more. But I mean, there's some stocks like the trade desk or some of these other stocks that can't find a bid. So I'm happy to see that things have broadened out a little bit, and the value trade, it comes into vogue for a couple days and stuff, but then it seems like they migrate back to the tech.
Well, Joel, let's also remind listeners that we got some possible turbulence coming up from two different things. We got the quad witch coming up, and then we also have the Jewish holiday rotation, which you always notate on our show. Maybe break down how we may see a little shuffling around between different sectors here as we get to those two key seasonal events.
Yeah, well, first with that quad witch expiration, of course, you sometimes you see like a really strong continuation of the trend, or you see like a major reversal. So I'll be keeping a closing eye on that price from Friday, where the S&Ps go out, and use those parameters for the week to to gauge what the next action is. And the way it's turning out, and it's an old adage, and I think the historical significance of it is probably very debatable. But Sal Rosh Hashanah, and that's the first of the Jewish holidays, that's the Jewish New Year. The theory behind that is that, you want to think during the 10 days between Rosh Hashanah and Yom Kippur, you want to be free of the markets and think about material things. You want to reflect on how you were during the past year, and which is nice on the surface, but I'm sure not a lot of Jewish people think of those terms. So you sell Rosh Hashanah, and then in between those 10 days, you wait, and then you buy after Yom Kippur, which would be not at the end of next week, but the end of the following week. But to tell you the truth, I think the quad witch expiration is a much more determining factor, and how the market plays out tomorrow will be your best determinant of price action moving forward.
So, Joel, to me, it seems like everyone is still bulled up. Makes sense. Markets are continuing to move higher, but outside of gold, which is usually considered more of a defensive play, are you seeing any investors taking any sort of hedging, any sort of defensive nature or posture with any of their trades right now?
I think the SIBO is actually going to start delisting puts unless you're selling them. There was some talk from the big banks about, sell the news opportunity. And yeah, if you're a shorter term trader, I mean, there was a dip in the action. And then also you had a little spike, even though the market went up earlier in the week, you had a little spike in volatility. What one adage a buddy of mine's father told him was, borrow money when you can, not when you need to, right? And I'm just saying, for as far as the hedging, even though the VIX is a little bit elevated, I mean, the protection's still cheap. But you know what? It gets cheaper. So it's very hard. It's very hard to time the market. I'll go back to, what I've said, over the years being on your show. Where are you at in your investment horizon? What are your targets? What are your goals? Do you have someone going to college? Do you want to buy a new boat? Do you want to buy a new house? Those are things that you got to take into consideration. And they also, the tax man. I mean, if you're looking at some stocks that have not had a good year, well, I'd be waiting to dip the toe in them because there, believe it or not, there is going to be some tax loss selling. People are going to be trying to offset, some of the gains if they're taking any. So I think that's one consideration that investors should, be aware of here. Not only going into the quad wedge, but for the final quarter of the year.
Well, Joel, speaking of the final quarter of the year, I think the big question on people's mind is should they order S&P 500 7,000 baseball hats?
At this point, I don't see anything stopping it. But, that's only 300 points away. A lot of different things can happen. The higher this market gets and the more pain that, is inflicted on the people that aren't fully invested, I wouldn't rule it out. I wouldn't rule it out. I'll tell you right now, you know, I feel there's much, but at this point in time, and you guys know I can change on a dime. I feel like 7,000 is a lot more attainable than 6,400.
Yeah, Joel, that's saying a lot, but you know what? That's what the market, I think, is telling us too. And you're right, things can change on a dime, but fact of the matter is, markets are melting higher, and whenever there is negative news, it is bought back so quickly. That being said, what do we need to look out for? Anything that could really turn this ship around, data wise, news wise, just anything on your radar?
I mean, I'll just go back to, the usual suspects here, jobs number, which will be coming out in a couple weeks. Not actually won't be coming out for till the first Friday in October. So that is not going to be until October 3rd, I believe. And then later in the month, you'll get some inflation data. I mean, and one thing that, that you talk the weaker dollar, whatever. I mean, this is gonna what the Fed they're greasing the pumps, right? So if this doesn't bring back inflation, I don't know. Maybe it won't. Maybe the weak dollar is compensated for all that rise in prices. But keep an eye on that because if inflation starts to come back, then the Fed is in a world of hurt because they've already started to cycle. And you look at the history of the Fed, once they start going in one direction, they don't change direction that fast. So they're on a path to lower rates. That's what we have to take into consideration. Maybe they're looking at the middle of 2026 and saying, hey, these rate cuts may reignite inflation. But for right now, you know, let the good times roll.
Well, Joel, we know that you really focus on the tech sector, and sometimes we'll highlight a specific stock or two to discuss. And this week, it's got to be Intel. We know that the government took a stake in it, and so they want to get chip making going outside of the Nvidia sphere, and yet Nvidia comes in and takes a position in Intel. What do you make of this tech juggernaut?
I flabbergasted, flabbergasted by this move. I think, without, talking, I'll talk broad and then I'll talk specific. Broad, don't don't mess with companies the government gets involved in. You look at that stock MP Materials, what that has done. I think it's just, the government wants what the government wants, they get. And Nvidia taking a stake in, one of its rivals is really unprecedented. $5 billion investment in Nvidia is, not that much, but you see some collaboration there. So doubt, it will lead to a takeover, but two companies, rivals teaming up, very unprecedented. I will note Intel was much higher, so some people took the opportunity to go cha-ching and ring the register. It actually traded over $33 in the pre-market, actually traded up to 33.43. It has not been in that area since July, over a year, July of 2024. So the price action, while it's constructive, up 22%, up over $5.50. Some people did take this opportunity to ring the register.
All right, Joel, wrap it up here. Thanks for taking time with us on this pre-market Friday. A lot going on in these markets, and again, it just seems like a lot of good stuff going on for these markets. A lot of people still waiting for some sort of a longer term correction, but as I said, right now, any short term weakness seems to be bought pretty quickly, and the markets, at least right now, just continue to melt higher. Again, Joel Elconin, co-host of the Pre-Market Prep Show. Click the link in the show notes to listen to Joel's show. Joel, thanks for your time today.
Thank you.